There's like a lot. First is something a lot of fintechs don't do. They don't get enough context before starting. Right. For example, even starting from the word fintech, as basic as the word fintech, when people hear fintech, they think it's payments. So people will come to you, for example, say, oh, for example, say, I want to start a fintech. And I'm like, okay, which which fintech? And I'm like, fintech. I'm like, nah, that's like too broad, right? For a start. So the the most important thing I see is people need to get a lot of context on what is required for the nature of business that they do. Sometimes you find that the nature of your business might cut across several fields, right? And like several things, and you need to like probably get a bunch of licenses, not just one, right? So at that point, I think it helps you decide how to shape your business model. Probably you want to focus on one business type before moving to the other, because the regulators are also like being careful for you to not commingle funds, right? You see a business, for example, a payment company doing payment on one hand and doing investment on the other hand. So the money that they take for people's payments, they go and invest it where merchant is expecting payment in T+1. When it's T+1 to pay, the money is hanging somewhere. You can't pay the other guy, then everybody is crying. So like, you can't also blame regulators. So they need to figure out things like that. So you would need, I think that's even more common with lending companies, right? So they take investments on one side from like people investing, and then they lend on the other side. Yeah. So you need to like look at what's required based off your business model. And I think another big thing with like regulations and like regulatory stuff is people need to stop this idea of they just name other companies that they feel are doing like similar things without actually looking at their business case specifically, right? You can be doing savings and loans, but you are very different from a palm pay, for example, in so many ways, right? Or a money point, or like, so you need to look at your business case, because some of the companies that we've spoken to say, oh, you know what, wait, we're a savings company. Then when you look, they're doing FX on the side, a lot of things. Then they get an MFB license. With an MFB, you can't do FX. So it can be problematic. So that getting that understanding right before you start like doing whatever you're doing is like pretty important from a regulatory perspective. So, and why I said it's a big question is because like fintech is broad, right? So there's like different aspects to it, and those different aspects require different licenses. And if you're smart enough, there are some that don't even require license. But then because you see another person getting license, you then rush to go and get license. For example, someone wants to issue virtual cards. Like there's like different types of virtual cards. There's closed and open loop. You have a closed loop card where you're looking for license. Then you go and get a banking license for a closed loop card. That's just pure waste of money, right? Pure waste of money, pure waste of time and effort and resources. So those are like some of the challenges you find with a lot of fintechs, and it's like pretty important for them to just like get an understanding of what they want to do. The last bit I think I'll mention is getting an understanding of what your long-term goal is, as much as you have an idea of what your short-term goal is. So for long-term goals, a lot of times you can start as, looking for a good example, you can start as like a payment company, but your long-term goal is to become a bank or something, right? The best way to start is not to go and get a PSP license in that instance, because then within 1 month of getting that license, it becomes automatically useless. If you want to start holding money with a PSSP license, you can't hold money. So you get the license, you launch. The moment you launch, you discover that you cannot hold money, then you are chasing another license for another 2 years. That's a problem. So you want to structure your business, right? In fact, it's safer for you to say, okay, you know what, let's do credit first. Since what we want to do is like banking, let's do credit first, right? Lend people money, get customers, validate, then move to something else. I mean, with that, you can go and get probably a lender's license from maybe like Oyo State, or somewhere like that one magistrate to just quickly give you license like in 2 days, right? And then you sit there, you do digital lending, you start lending, then you move from there to, okay, we have like a lot of customers now. People are beginning to ask us this thing. Let us find another way to do it. Then you do that. Then you move in progression, and then you move towards your goal. But a lot of times, people look at like only their short-term goals, and when they start growing as a company, they just abandon a lot of stuff, and then they're looking for who will buy license. That's like not the exact way to go. There's also the flip side of things where you focus on your long-term goal and you forget to start with your short-term goals. So it takes you another like 4 years to even launch in the first place, because you're looking at 4 years down the line as opposed to looking at today. Examples, right? You're looking to, I use the same example. You're looking to like become a bank, right? Then you're waiting for the central bank to issue you a banking license, which will typically take 1 year or 2 years in some cases. You haven't thought about the fact that you can go and get like a SEC license, right? Maybe like it takes you 2 months or so, and you start doing investments, collecting money from people investing and getting it back and seeing like how that goes before you progress into becoming a bank. Or think about like doing cooperative just to test your model, a couple of people together giving you money to save and then invest and then give them back their money, right? Which is like a quicker way to do these things. But then you look at things from a perspective of you want to become a bank. Then you're from day one, you don't even have a product. You go and raise money with your pitch deck, fine pitch deck. Then you get money, then you now apply for a banking license. Then every update you're saying, I just give investors update about where your banking license is. Say, oh, it has now moved to this stage. Our lawyers have informed us. But like you do that for 2 straight years. Whereas another competing company that, has gone very far. So you need to like look at what matters the most to you from a regulatory perspective. Last thing I would mention is you need to also like engage regulators early. Good way to do it is to engage informally. Yes, you may not have their contacts and all of that, and that's why it's important to like attend events. If you heard that central bank is organizing an event to educate people on something, it can even be like market women something. It doesn't have anything to do with your business. You go and attend that event, you get the contact of somebody, you ask all of the questions while he's standing there. He doesn't want to fall your hand or his own hand. He will give you some answers, in some cases give you very good answers to like the questions you need. Now you've formed an opinion in your head, and using that opinion you can essentially build on it. That's like another very big mistake people make. So you're waiting for like writing formal letter, doing all of those things. Those things are also good though. I'm not saying, but like you need to think as a startup, like start lean as lean can be, right? And that's like the way to do it.